It's not about picking stocks. It's about picking the right portfolio.
GDP headline, plus 3.3% quarter over quarter, up 20 basis points to 3.1% year over year, so an acceleration. But, and this is the important but, the deflator, which is the inflation component, was lower than expected, 1.5% versus 3.3% last quarter. And then basically all expenditure categories slowed, real final sales slowed. And then we had durable goods this morning, which also slowed. So you have a better than expected GDP that's based on this mathematical component called the deflator.
Okay, let's do a little thing, and I don't even need to look at my model right now, but I'm going to go deep here for it. As we're simplifying this year for 8th to 12th graders, right? Because we want a baseline so that the people that have graduated beyond that level are still leveling up, but they understand the base pack, the fundamentals really always matter. So GDP equals C. Do you know by chance what the big G was in terms of the component?
Hold on, I will get that. Keep talking again.
Okay. GDP equals consumption plus investment plus government spending plus the netting of exports and imports. This sucker has equated to basically a third of the numbers, because the way that we do it in America now is we say there's no recession because we borrow from your children and we borrow from the future to tell you today that this number can be up a lot today and represent a third of the number. That's why you're running a $1.7 trillion deficit and have going on $35 trillion in U.S. debt. Okay, so that's just to table this thing. Now, the deflator, which is the proxy for inflation, if they used 1.5, and again, I can't believe they used 1.5 because that is so absurd that it renders the last 7 or 8 revisions of the non-farm payrolls to the downside as less absurd, which is absurd. So that's a relative thing. But if you say inflation was 1.5, when it was actually 3.4% in the most recent reported on their own metrics, and again, as you know, real world inflation is higher than that. So let's just use 1.5. Let's just use 1.5 instead of 3.5. That overstates GDP if it is, again, if GDP is stated at headline plus 3.3, just simplifying it, that overstates it by 200 basis points. It's ridiculous. It's ridiculous at this point. And people, I'm not going to get mad about it. I'm just going to laugh about it. I mean, it's like I live in Argentina. It's like I never wanted to live in Argentina, and I may have to reconsider things, but I'm not going to move to Canada where it's worse. I mean, this is ridiculous. This is ridiculous, okay? You sure about that number, that it's 1.5?
Yeah.
Wow.
Got it more than cut in half quarter over quarter.
Oh, just great, yeah. Great. That is an amazing thing, isn't it? To watch this. So again, we've been trying to separate your brain from your emotions, obviously, but also trying to separate the economy from markets, the bubble of it all, and the rest of it all. The economic earnings down 42% on the Russell, and the bubbles, which, again, ostensibly are because NVIDIA and Microsoft are going to show massive accelerations in revenue growth. So that's it. We've been trying to go there. But then we have this third dimension, which is the government making up numbers, right? I mean, it's not a hurt. My PA is at all-time highs. I'm laughing because I'm just trying to reconcile, how do you think this fourth turning is actually going to end?